Hi traders, welcome to this video update with me, 𝖢𝖥𝖣yi, head currency analyst here at Blueberry Markets, and we're going to be going over the price of CAD yen. This price has come up into a really interesting level of resistance. So in last week's live stream, one of our subscribers asked to take a look at CAD yen to see if there was a potential for the market to move to the downside. So taking a look at it today, and we can see that price is at a key level of resistance. We've got the 104 spot 50 handle. Price has recently formed a double top around about the 110, and we've broken through that with the neckline being the 104 spot 50, and price has come back to that level of resistance now, and we need to ask ourselves the question: will price continue to the upside here, or will price break lower? Now the yen has been really weak recently. That doesn't really look like it's going to change anytime soon. However, that doesn't mean that price can't pull back in terms of, is the CAD going to be the dominant market here? Now, the Canadian dollar has been dominant. If we bring in the currency strength meter here, we can see that the currency strength meter is showing the CAD as the strongest currency, being +7. Now, if we look at the meter and I just highlight what typically happens when a currency is in this zone, we often get a reversal. Okay, so what I'm really looking for is the Canadian dollar now going to start to weaken, and will that see CAD yen start to press to the downside? So what I like to do is, when we have those type of situations, is look at the price, look at the weekly chart, see what the price is doing. Now price came into the 104 spot 50, formed a sort of indecisive candlestick. We obviously saw some sellers coming in last week with that little bit of a drop to the downside. However, using multi-time frame analysis, I want to identify when is the right opportunity to trade. Okay, not just about should we get short right now. That's not the point. The point is doing it in a safe manner, doing it in a manner that has probability on your side. So what I typically look for is for a reversal pattern to form. So if I go to the 4-hour chart at the moment, what can we see happening? Well, I can see a pattern beginning to form here. Now it's a very shallow one, but you can see that the price made a higher high, it came in and it made a lower high before potentially breaking to the downside. Now if it does, that would complete the head and shoulders pattern, because we have the left shoulder, the head, and the right shoulder. So really speaking, if price was to trade through the neckline area, which is a little bit of an ascending neckline, then that would offer potentially an opportunity to traders looking to get short this market. Now alternatively, you can see I've got the 20, the 50 moving average, and an RSI 10 here, because I use this quite often to identify opportunities of when the market is going to enter a trending condition. Now the way I can show you how effective that is when price came into this area here. If I just go back up to the weekly time frame, for instance, and we zoom in, when price came back into that resistance and we started to trend low again, or trade lower here in line with that sort of weekly downward trend at that point, the 100 spot 50 acted as resistance. Now if I go back to that 4-hour time frame, and all I'm going to do is we're just going to zoom back to see what happened at that area of resistance. So I can clearly see here, price came up into that area, we stalled for about a week or so, and then price started to make a lower low here on the 4-hour time frame. So what happened when price started to drag lower was the moving averages then crossed, obviously because the moving averages are an indicator that is driven from price. So price is always going to be the leader, the indicator is always lagging. Okay, so the average of 20 candlesticks and the average of 50 candlesticks, okay, and these eventually cross, giving us a potential opportunity to have a look at any downside movements here. Now we can see then price continue to trade lower before price pull back into those averages, and the RSI went above 50. Now what I like to do then is look for price to go below 50 to then see if we can get that continuation to the downside there, and it happened on multiple occasions until price came into that level of support. When price came into the level of support, what happened? We had a inverse head and shoulders pattern with the left shoulder, the head, right shoulder. We crossed, and the same thing happens again. So it's about using that repeatable pattern to see if price will change trend. So here, for instance, what I'm waiting for now is for price to potentially complete the head and shoulders pattern, wait for the 20 and the 50 moving average to cross, and then there's an opportunity for us to then look to see if CAD yen would trade lower once again. If it does, where could it trend lower to? Well, it could come all the way back down to this 100 spot 50 handle where we had all this resistance before in the past. Hopefully that made sense. That's how you can use multi-time frame analysis as well to help identify whether the market is ready to make a move down. Now, if we don't complete the pattern and price continues its upward trend, then price could head to the next level of resistance, which could be the 110 handle. Likelihood of that is, we don't know. I would say it's a very low chance that price will trade higher, only because we are at a weekly resistance level. These can often see short-term reversals coming into the market. So keep that in mind. I hope you enjoyed this video update. If you did, leave it a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content. And I'll speak to you in the next video.